Approximately 60 million options contracts trade every day in U.S.-listed markets, and while headlines can focus on retail activity, you cannot forget about the presence of the institutional market players. So today, we're pulling back the curtain on how these sophisticated options users execute their trading strategies with Annabelle Baldwin and Kevin Holbert at SpiderRock. SpiderRock is a technology firm offering data and analytics, trading and risk systems, routing logic, and they recently launched an options ATS. On to the discussion. On the new client front, for people that are unaware, you deal heavily in the hedge fund space, kind of people, obviously, they're interested in trading options. But when it comes to new clients, do you see like new vol fund entrants frequently? Like over the course of time, like where would you kind of say that markets are in terms of like new entrants, I guess, to the space? And maybe you could address that as like not new companies, but maybe new to options, or maybe it is just a brand new entity that's like, okay, I've got this great relative value idea. I've got, whatever the case might be.
So from a vol perspective, I think the hedge funds that are trading vol have gotten larger, at least from a footprint that they have with us over the course of the year. I would say that there were new vol funds coming in the space a little bit more frequently a couple of years ago. They wanted to get into that dispersion trade, right? And maybe they were trading behind actually a little bit. But I would say that I see less new vol funds coming online these days. But the funds that are trading vol are adding pods. Okay. Now, from an option perspective, I think in the institutional space, and I'll let you, Kevin, talk about this a little bit, but I think there is an adoption of trading option, by and large, right? That's increasing. We see a lot of newcomers in the space in terms of asset management, advisors, people that are using option, on a daily basis. Yes.
Yeah, I just add, for SpiderRock, we're also going after a wider customer base at this point. And so I wouldn't say they're new entrants, but they're definitely new for SpiderRock. And so we need a wide range of liquidity providers on our platform in order for this new ATS to get off the ground and really get going. And so the adoption from liquidity providers and the feedback we're getting from them is actually very positive, because in a market that's moving quite a bit, having an electronic process where you can efficiently, respond to flow, then that's what our ATS allows these liquidity providers to do, is interesting. Also, I think these liquidity providers are interested in interacting with retail flow, as well. And so, we are giving them that gateway as well.
Well, that was actually one of my questions, so I'll come back to my other one. We'll be jumping around a little bit. Yeah. But you mentioned the R word, retail. And I literally had the question, how do you see the increasing participation of retail and options trading influencing the opportunities available to institutional players? So you kind of, we called that out.
Hinted there, right?
But say more. How? Why? The opportunity.
Let's talk about this. So SpiderRock for the past 15 years is a system that was offering, algos, by and large, to hedge funds in the vol space, right? And that's what we do, and that's what we do well, and that's what we're known for. This ATS that Kevin is mentioning, option ATS, it's an option ATS, not a stock ATS, was launched in November of last year, and facilitates two types of auctions. One that is commonly used by other option ATS, we call flash auctions. That's a really short timed auction. For us, it's 100 millisecond. Literally, you have automated system responding to this, right? It's an opportunity. And the flash auction, by the way, is for us, it's true. For others, it's true as well, but it's embedded into algos, right? So if you wanted to, instead of removing liquidity on the screen and paying a fee for it, maybe you run a flash auction via an ATS to avoid that large take fee, right? You also have perhaps a price improvement opportunity as well via these off-screen liquidity providers responding to these flash auctions. So that's really the systematic crowd that respond to an ATS because it's so fast, right? It's 100 milliseconds. Sometimes it's less, right? So that's flash auction. We also have block auctions, and I'll go back to the retail questions, right? But we'll also run a second type of auction process via the ATS that is what we call the block auction. And that's really sort of mimicking what's going on, upstairs to trade larger orders on a much longer time frame. So for us, currently, it's up to 5 minutes. But the responders on the other side of this are human beings. No, they're not systems, right? They're human beings looking to respond to a larger order. There is a price discovery interaction going on via an automated system that we've built. But these block auctions that's very novel. Currently it's done very manually, via, phone calls or chat systems. But now we have, put out there in the market an automated system via which you can, transact these large block orders on a system. Although you do have a human being responding to this, but it's by and large automated via a screen, right? So going back to the retail flow. So the retail flow, there's just a couple of things going on. First of all, those retail brokers, the flow is changing quite a bit. The flow is getting maybe a little bit smarter than before, more educated than before. The flow is getting chunkier, right? Some of that retail flow is trading large orders, right? So some of these retail brokers are actually intrigued and interested by alternative ways to route that flow. And for the chunky side of things, of retail flow, these block auctions are actually interesting. It enables them to get things done via an auction process like this. In our situation, we currently handle some chunky retail flow. They start by being handled via the ATS. If there's a response from one of these liquidity providers on the other side, great. If not, we start running a smart TWAP algo, right? Just to get them done on the screen. So this combination of block, via the ATS and then algo to clean things up and, to get things done is something that's currently happening for retail brokers. Again, for larger orders. Because of these larger orders, payment for order flow is maybe something that's being discussed between market makers and retail brokers, meaning that the traditional market makers might not want to pay as much for these larger orders that they used to. The nature of the flow is changing, right? So why would I pay, on a large order like this, or at least I don't want to necessarily pay as much as I used to, right? So that also puts a little bit of a crack in this payment for order flow process. So that gives an opportunity to automated execution services like SpiderRock to get in and to say, there's perhaps an alternative way to handle retail flow. Furthermore, I think via the flash auctions, and then I'll let you talk, Kevin, I'm sorry, but furthermore, via the flash auction, we're thinking, and so flash auction, a combination of flash auction and what SpiderRock does best, which is the analytics, the live analytics that we run. So we're able, because of our algo background, right? We are fitting live volatility surfaces through the market very precisely and in real time. So that gives us an opportunity to actually compute edge to surface. So every time that there's an order that comes in, we're actually able to calculate what this edge to surface is, how much is this worth? So knowing that, having that knowledge, why not imagining, for even a small retail order coming in? If we know what that small retail order is worth, now we can perhaps embed a commission or a negative commission rate from the retail perspective, a negative commission rate that we advertise on that order, and paying a variety of liquidity providers via our ATS to say, this is what it's worth and this is how much you need to pay to respond to this retail order. Think about it as an alternative to PFOF, right? This is what this order is worth, and we ask you to pay about half of it, which this negative commission rate is then passed through to the retail broker, just like they're currently being paid, via this PFOF, and they have EQ, right? Well, we provide all this at the order level, right? And then on the other side, if we are successful in assembling a syndicate of liquidity providers that all together can actually, by and large, respond competitively to this retail flow, then we've just created an alternative way to handle retail orders, and it's a far more competitive process than what it's currently happening, via a couple to three large,
far more bespoke.
Yeah,
it's almost like bespoke PFOF. Right? Like it's almost like if instead of me being firm A having a relationship with broker B, and I'm like, I get this much, and regardless, I'm either, I'm handling it in whatever way I handle it, whether via internalization or whatever. And essentially what you're saying is like, well, I like that order from broker B as firm A. I want to interact with that. Maybe not this other thing. I don't see where I fit into that.
Well,
is that somewhat accurate?
It enables, instead of buying flow, at scale, like what's going on now, right? You actually, from a liquidity providing side, you actually, can decide at the order level what you're interested in responding to, right?
Yeah.
And so that becomes a lot more competitive. And probably better, the liquidity providers are far better off, right, doing it this way. And this negative commission rate, by the way, is tied to how much edge is associated to this order, and not sort of randomly negotiated as a PFOF rate.
As some paint with a broad brush, everything's this, however many fractions of a penny per contract, etc.
So you can be a lot more granular in the way that you respond to flow.
And more complicated, as I'm sure you're dealing with on a daily basis.
That's
that's evolution.
That works, right?
Yeah.
It's evolution, but it's automation as well, right? So yeah, there's a lot of moving parts in that. But it's what else, Kevin? What would you add to this? Or describe it?
Well, I think you nailed it. A lot of that is from the kind of flash or electronic side of things. But there is an advantage for liquidity providers on, what we call a block order, or like Annabelle had mentioned a chunkier order, something bigger. From an initiating client, and it could be retail, they get some price certainty. So they say where they want to trade, and their whole size gets to trade at that level. For a liquidity provider, there's a big advantage to that as well. So if you're on the other side of that trade and someone wants to buy 1,000 contracts, they're telling you they want to buy 1,000 contracts. And so you're pricing it for 1,000 contracts rather than someone coming in with a lot of small orders. So there are advantages to this style of trading. And we're introducing some of that retail flow to these liquidity providers who have never had access to that, in this upstairs style of trading.
I mean, on the retail side, they wouldn't even know it. per se, because, they're not the one putting an order into the SpiderRock, system,
Right.
but are they, they're probably getting price improvement to some degree, or is that not really it's like more of a liquidity provision role within this, because a lot of that has maybe already happened at the order entry point, if that makes sense.
Are you talking about flash or block here? I'm not sure.
Oh,
I mean, I
I
think
was
it's
just
for
referring
both.
generally.
I think for both,
Both,
it's
right?
both. I think it's both liquidity and price improvement. It could be. And then, as you know, like anytime we're going to cross one of these orders, we need to bring it down to an exchange like the Cboe. And that gets exposed again. And so there is another chance for price improvement there too.
Right. And back to just for anybody that might be listening, the fundamental differences here between an equities ATS and an options ATS, and we have some market structure underpinnings that are
for sure.
fundamentally different. So it's and I don't know if you want to get into that, but if you have like an elevator pitch for why they're different, we could probably squeeze that in. But if it's a PowerPoint that requires 60 minutes, we can move along.
No, I would, if I were to explain it, I would say for an equity, really the only thing you can do is buy or sell that equity. And then, different investors care at different price levels. In the options market, if you're trading IBM, there's hundreds and hundreds of options that are being quoted, and they're all slightly different. And so if you want to trade one specific option, it's really it's like a reverse inquiry process if you want to trade upstairs, right? If you want to check a market maker and find out where they would trade with you. And so, that complexity of the market structure in the option space has made it very, very hard for someone to do what we're doing. If it was easy, someone would have already done it. And this is something that we've been working on for quite a while, and it's not an easy thing to solve. Give it the number of
years, Kevin.
Exactly. Yeah. So we're 5 years in at this point. It's not the easiest problem to solve, and that is mostly because of the market structure, as you mentioned.
And then combine that with, and when we're saying market structure, we're roping into that by, data. And to Annabelle's point, right? Like that was actually one of the other questions. Do you have like just a current ballpark figure? I was just, now it's outdated. I know Opera puts out those, I think, quarterly charts of, what is peak messaging look like on some sort of, very granular time scale.
I know it's the one, I think it's the one systemic risk of the option market is the amount of quotes, flying around on this Opera data feed. It's just becoming so massive, right? And I think for anyone out there to keep up with that feed is a challenge.
I don't know if, it's a mind-boggling thing to even try to conceptualize when you're talking about time frames that are, a blink of the eye is slow, like by comparison. And, it's numbers that are so gargantuan in that tiny sliver of time that I was talking to a fellow, and it was like the example of, use a consumer laptop and try to open an Excel file with just like a fraction of a day's anything in it. And you're probably going to like break your laptop, or like it's going to freeze on you, or Excel is going to crash. And that's just a fraction of 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 the type of stuff that you guys are talking about.
Yeah, no, it's absolutely remarkable. This option market is I don't know what happened on that Friday where industry-wide, we traded over, I think it was 101 million contracts that day. I just don't know if everybody kept up with this. We did, thankfully, and we did it on the older version of the system. So SpiderRock, by and large, the client base is still on what we called V7, the 7th generation platform. The ATS is actually on V8, so we're rolling out the 8th version of the system right now. But most clients are still on V7, and V7 kept up, which was great. V8 is built on it's a much bigger system. It's much newer hardware, bigger network, far more capacity. And it's also a global derivative trading system where we're going to be able to support SEDEX, the Cboe derivative exchange and others. So SpiderRock is going to bring their algo and upstairs, execution capabilities in Europe as well.
Well,
and perhaps Asia next. We'll see.
Then we open up a whole new can of who are the players and what are their problems. But maybe to just kind of back it up, right. Maybe if you could walk me through like an example of, not like naming names or too specific, of kind of like a person came to us with this workflow issue and we solved it this way. Or, maybe a handful of kind of, I know this is all like very kind of unique per person. So, but just generally, like, I'm a, mid-tier vol fund. I'm playing in this space. I have, maybe to your point, I've been running a dispersion book. I walk in your door. What am I saying? What am I trying to fix?
Maybe I give an example of the core business, which is the vol, the vol side of things, and maybe you give an example of what we're trying to solve on the, on the ATS side.
Perfect. Yeah.
But traditionally these funds that were, running volatility strategies would. The way that they were executing without a system like SpiderRock, a lot of them would execute using the bank option algos, right? And some of the banks are, they have great vol algos, right? Not all do, but some of them do. The problem with that is it's not so much on the execution side of things, we might be doing things a little bit more precisely just because our quant package is very solid, meaning that we can imply the market very precisely, via volatility surface feeding process and other things, like alpha probabilities that could go into. But by and large, I think we automate their workflow of being able to upload large orders composed of thousands of different series that are as a basket of parent orders. And these baskets are all tied together with some sort of risk constraint or risk limits, applied at the symbol level or the expiry level or overall for the basket. If you're going to be, for example, long a bunch of single, stock option, and then we're going to short, the SPX against it or SPY or whatever. So you get into this dispersion trade, but you want to keep things very balanced, right? You don't want to, run things unbalanced in terms of Vega exposure or whatever. So not only we've got algos that are precisely trying to get you filled at sort of this implied mid-market across thousands of series out there, but we also keep track of risk as we receive fills through the system. And a client can give us what we call the risk groups, that are expressed in, could be Vega, it could be other things that they, that they prefer. But we have this concept of risk counters that are embedded in our execution system that keep track of a balanced risk profile. So this workflow, and it's very iterative, right? So, we have market data coming in. We've got, fills coming in. We've got risk constraints, being continually calculated. And the client is loading a basket. Maybe they just cancel the basket. They reload the basket with different criteria. It's kind of an iterative execution style until they achieve what they want to achieve, right? But I would say that the workflow of uploading large baskets of orders, keeping things balanced in terms of risk profile, getting precise execution that's roughly at mid-market, if they can. All of this, it's an automation package that works really well for these guys to be able to scale, because a hedge fund the capital is not the constraint, right? They manage billions of dollars, these guys. And they're going to compete internally. A portfolio manager that's in the vol space will compete for allocation of capital, right? So they need to show P&L. But the idea for a hedge fund is to be able to actually just invest a lot of capital. So the way that you do that on the vol, and by the way, you limit it on the vol side to, the biggest vol fund is probably running maybe $1 billion, but that's big for a vol fund. Typically, they're a few hundreds of millions of dollars, right? But we help them scale. If they can scale the amount of execution they get via dispersion or relative value or whatnot, then they get bigger internally at the hedge fund. They're getting more allocation, internally. So this whole automation workflow from loading these balanced parent orders as baskets, precise execution, live risk management at the order level, at the portfolio level, all of this is, audit trail, all of this, is the full package, right, for them. So that's the problems that we solve. And typically these guys there's very few human beings on their side, you've got a trader and you've got a quant team of 5-6 quants on the other side, and the system is completely automated. So it takes them months literally to automate their strategy via SpiderRock. And once they turn it on, it just executes. And there's very little tweaking to do unless you just get into a volatility regime that changes. Then they have to readjust their models. Sometimes they just take it down. Sometimes they just pause. They retweak their models, and then they launch again, right? But that's pure automation there. It's great.
Yeah, it's just that simple.
It's very simple.
That's always your cue, I think, Kevin. It's not
simple,
complicated. So,
yeah, I'd say we're also working on the ability to stream quotes or respond to these really quick auctions. It requires technology, and it's only something that a few firms can do. And so we're building out the ability for some of our clients to, what we call it an auto respond, but basically you give us your axe list or your interest list, and we will watch for you. So as we have orders that match your interest list or your axe list, we will interact with them, we'll trade with them. So that, that will include auctions, so all of our auctions. But it could potentially even be, at some point, some of our electronic orders. But the idea is, if you don't have that technology, you're probably going to miss out on some of the initiating trades. And so we're outsourcing the technology for you, right? So we're doing that. And we're giving you access to something you probably wouldn't see otherwise. And that's something that some of our clients have come to us and asked for, and it's something that we've been building out.
Yeah, that's a very interesting point. So there's really two ways to respond to incoming auctions, right? You either connect to us via what we call the Nemlink API, which is a WebSocket API, and we stream these auction messages out to you that are, by the way, decorated with market levels, Greeks, where the SpiderRock surface is. So as a systematic responder of this, you build your own decision tree on your side, right? And it's easy to build, easier because we provide you with all sorts of color on that auction notice. Where's the market? What's the implied is, what are the Greeks? So it's easy to build a decision tree on your side, right? So this is kind of a WebSocket, API. Things are streaming out to you, with a lot of color around these auction notices. You respond, right? Or you do what Kevin just said, which is really interesting too, because it's really sort of less complicated. What you do is, I'm interested in these names. I'm interested in that in this shape, meaning, expiry range, delta range, I have that much room, from a, maybe a limit to the SpiderRock surface or whatever, and I literally load this axe list, as a flat file into the SpiderRock system. And then from there, the SpiderRock system creates parent orders that correspond to incoming orders on the other side, and we generate across on your behalf. That's easy.
That's really cool. I mean, it's like just another way where it's, you're taking something off the client's hands.
Completely. And that's a whole concept of SpiderRock. Where do we begin? Where do we end, right? And the concept of SpiderRock is, has always been, look, you client of SpiderRock, focus on what you are very good at, which is creating alpha via your trading signals, right? Let us just own this alpha for a few minutes through execution techniques, right? Let us not bleed this alpha in the market. All this hard work you do on the quant side of things to generate trading signal, you can literally just bleed that alpha by executing in the wrong way, by paying the spread, right? On hundreds, thousands of different series out there. Let us just help you and take this and really make sure that we preserve the alpha that you've worked so hard to generate, right? Via routing techniques, whether through algos or through the ATS, off screen. Let us help you with this automation.
The more that I'm around these markets, I feel like between bad routing and taxes, it's like, boom, there goes all of your profits in a year, potentially. I'm not really kidding. It's like, man, it looks so good on paper. And then it's just that alpha bleed, as you say, it can just like disappear.
Well, and at the beginning of SpiderRock, the conversations were really interesting because we are charging for this system a little bit more than everybody else, right? It is an expensive system in the way that if you think purely about, cost per contract executed, we probably are higher than anybody else. However, if you think of your execution in terms of TCA, trade cost analysis, because we try to save you half the spread through hundreds, thousands of series that you're trading, you're actually just far better off using these techniques to execute. Even though, transactionally we charge you a little bit more. Yeah, we take a little bit of vig on the cost saving that we realize, from timing things correctly and really providing you a lot of price improvement, right? So it's you almost have to it's a mind shift on how to think about execution. The vol crowd is completely understanding of this, right? I mean, they live and breathe this. But I think for the other folks that don't necessarily think about the derivative markets and the different dynamics of how derivatives move, that's going to be an education process for sure.
I mean, just to add one other thing here. We are, I think we're kind of blurring the lines between someone initiating an order and someone responding. I think historically speaking, it was an institutional investor who was your initiator. And then you had, customer facing firms or market makers who are on the other side of that trade. And I think with technology, because it's very hard for people to bring quotes and respond to these very quick orders, it's difficult to act like a market maker if you're not a market maker. And what we're doing here is we're giving you technology that will allow you to respond to those orders. So you're effectively initiating, right? That's what you want to do. That's the trade you want to put on. But you're doing it by responding to other people's flow. And it's something that you might not have had access to before.
That's a very good point. Yeah. And so following that statement, the current client base of SpiderRock being the vol funds by and large, others, but we consider them being really hybrid clients of our ATS, meaning that they can easily initiate and or respond, right? They can do either or. They currently initiate, via the IDB community probably, right? So they could do that with the system, but they also could be very interesting in responding to initiators because they have to lay off risk or something, right? So we are really sort of trying to be a central execution system for option traded, within an institutional client. I like the way that Kevin said it, blurring the line between initiators and responders. I think the roles were very distinct prior to not having the type of technology that we're running. But now, because we are really an access point, right, to, or we create this direct access between market participants, whether you want to initiate and or respond. I think that's now the lines are getting a little bit blurry, yes. Which is great because it really sort of expands the scope of how you can trade options and how you can manage risk.
We didn't directly, at least I don't believe we talked about this on our prep call, but because you mentioned just the term decision tree and kind of we're talking about this very automated type of world that people are living in and, living in more and more. How do you guys at SpiderRock think about artificial intelligence and its prospective role? And if this is already something that you're deep in the weeds on, just say pass.
Well, yeah, we testing things, but it's mostly internal testing. Can we write code, a little bit more efficiently? Can we do client support, more efficiently? So we are testing AI in those functions right now. Now, from a machine learning perspective, we've been using machine learning techniques for more than 50
ages.
years.
Yeah.
Right? I mean, in the way that, we compute, some analytics and, embedded into the algos and stuff. So that's something that we've done. But pure AI, I'd say that we are testing right now, really from an internal client support and perhaps coding, testing right now. Anything else that you want to add to this?
So I don't know if this is really AI, but a place where I see this going is if you take a real professional trader and they're trying to put a position on, they're going to know exactly where to go. So whether it's, working something on the screen mid-market, something like that, or, maybe using a broker or even calling a bank. But there's a decision to be made in how you trade that order. I think it could be really interesting to use data, and I don't know if that's necessarily AI, but to track the most efficient way to trade those orders. And I'd like to see us get to the point where we can start giving that kind of information to our clients to say,
that's probably
build
more
something.
Machine learning.
Exactly.
Modeling,
exactly.
Right? You model liquidity, you model the prints, you model the dynamics there. Yeah.
Exactly.
That's something that we've talked about, really working on going forward. Yes, that's correct.
Well, thinking of that, emerging trends that you guys are keeping an eye on. I mean, we've kind of addressed a couple of things tangentially.
I mean, what are the trends? I mean, I don't know what to say on the trends. I think, when you look at the retail flow exploding, still exploding, right? These retail brokers, there are not too many, they're at the most 10, right? They have an execution mandate, they need to, and they really are thinking about business risk, because right now it's highly concentrated within, a few large national market makers, right? So I think they're thinking about the amount of business that they're doing and that they keep on increasing these volumes, right? They have a business risk potentially by executing via just a select few. Hence, solution like we are starting to think about, are interesting to them because it might be not a replacement, but an alternative, something that they can add, to the list of execution techniques that they can employ. But they are busy. I mean, they're just, the retail crowd out there. There's a generation, by the way, there's a generational effect with all this. That's also really interesting for SpiderRock and the systems that we're trying to push out there, and all this automation. I think the younger crowd is so much more comfortable with technology and are demanding tools that are automated, right? So I think there's a generational impact here where you have to work on better tools. You have to work on automation. You have to make it so that the young crowd is, happy to trade options, right? And those are the problems that we're working on a daily basis at SpiderRock.
That's something I don't ask enough about, but I mean, I see it playing out, so maybe I just take it for granted. But, besides the fact that from an investing perspective, you have the generational wealth transfer that's happening, but then you have the actual end users, you talk about juniorification of trading desks. Are the people that are manning the helm, have they seen what their predecessors saw? They didn't live through an '07. I mean, there's all these different things with the generational shifts that I don't even really
but
think about, let alone
tools. I mean, they have. I mean, at some point, I remember thinking, my gosh, those retail folks have almost better tools than these institutional guys, right? It feels like with the Thinkorswim platform, that's already 20 years. It has to be 20 years old, right? I mean, it's it was a
maybe a little more, yeah,
maybe even a little more. It was an incredible platform to handle retail flow, right? For a retail person to actually trade options. They've had great tools for a while. I think the education that's happening in the business to educate the retail crowd has been fantastic.
And for very little or for free in a lot of cases. And I say free in the context of
order flow, yes.
Yeah, exactly. But I mean, maybe not for free, but I'm a user of a brokerage, and that brokerage now has all these bells and whistles that you can use, all of these trade analyzer, trade optimizer, actually giving you those Greeks provide. Well, I mean, it wouldn't be for free maybe in this case, but then now I'm a retail guy. I can look at L2 data. I can do all these sorts of things. And then if I have a little bit of extra cash, then for, you talk about a couple $100 a month, and then that's a whole nother world, right? Let alone then you start talking about some thousands, and you want to talk about blurring the lines, like what really is retail. I mean, I think it meant something a little bit more obvious 20 years ago,
for sure.
And now you have somebody that might be trading thousands of 0DTE SPX contracts from the golf course every day, and maybe and they're retail, but it's like, well, maybe on a premium basis, not so much, but they are, right?
Not so much.
So, yeah.
Yeah. So hence, I mean, again, about Kevin's comment about blurring lines. I mean, I think technology is blurring lines for sure. Access to technology and automation is blurring lines for sure.
I'll give you one more emerging trend. And this is also kind of touches retail, but flex options are, a big conversation now. So, there are traders who are interested in trading reversal conversion trades via flex.
Oh, the RevCons. Let's talk.
But there's also, there's these ETFs with embedded options now. And I think there's a lot of retail investors who are interested there, and it's helping grow the flex market quite a bit. I mean, Annabelle can probably speak to this better than I can, but having been to a number of different conferences, it's been a trend that's been brought up over the last couple of years quite a bit. So something to keep an eye on.
Yeah. Euroflex. Not American flex. Euroflex, yes.
Exactly.
Yeah, I mean, you remove this variability of, of expiration, of exercising, by choosing a Euro style, flex option. And so from a risk management perspective, that works really well, right? In the RefCon business or other type of financing or risk mitigating strategy. So that's that's really what promotes these flex options, is to remove the variability of the American style option.
Yeah. I mean, well, needless to say, we're quite pleased about the trends in Flex.
It's finally happening, right? I mean, we thought that it would happen. I thought it would happen a little bit before, with a move from the OTC, what was happening in the OTC market, to bring it back to the listed, via Flex. But that really just didn't happen as much as I thought it would. But I think now, and again, thanks to, I think, technology as well, that will, we're working hard on the RefCon, on the automation of a RefCon trade with Euroflex options. Because what's preventing, this to be done at scale is that it's operationally clunky to trade. But imagine that you have a system where you can literally just upload your list, and you've got people responding on the other side, and the RefCon trade happens automatically based on your list, by running auctions, automated auctions. Then you remove all these operational hurdles, right? That just happened. So this whole thing, by the way, will, really leans on our ability to create a solid trading network of initiators and responders. So it's very new. We just launched all the conversations we have on both sides of the coin, and sometimes, again, hybrid, people that may initiate and respond. All of these conversations are always positive. I don't think there was, one negative conversation. It's all intriguing. It's all, people are thinking alongside how we think, and they're like, that's great. Now how are we going to implement, right? Because this is forward-thinking stuff. So it's going to take a little while for people to join us in this journey, but we're going to speed things up.
As always, our required house cleaning items. The views and opinions expressed by the host and guests of this podcast do not necessarily reflect those of Cboe Global Markets and are for informational purposes only. They should not be construed as financial advice. There are significant risks associated with transacting in all of the financial instruments described herein. It is very important for market participants to understand their own risk tolerances. To review all relevant disclosures and disclaimers, please visit us at www.cboe.com/US_disclaimers.